All right, so we had a crazy week in the markets. The big piece of news from this past week, Bitcoin all-time high. At the time of me making this video, it's around 117 US dollars or USD. It hit about 118 and a half was its high on Friday. So that's the big piece of news. Bitcoin is ripping, and I think this is going to be a sign of things to come. Stocks did not close the week at a high, but we did have an intra-week high on the S&P and the NASDAQ. First things first, if you get value out of the video, please like, subscribe, comment. Check out those links below. Always appreciate the support. So first things first, let's talk about stocks, and we'll get into Bitcoin. So stocks continue to rip higher. I've said time and time again, I still think we're going to see a pullback before the end of the year. I think we easily could see 10, 15, 20% again. There's going to have to be a catalyst for that to happen, though. I don't think it's going to be the tariffs, right? Possibly, but I mean, that's kind of in the rearview mirror, at least to some degree. And I don't think it could be a recession, because you look at the jobs numbers. The jobs numbers definitely are not looking good. I don't think it's going to be a housing issue, because the inventories are way too low. So it's unlikely we're going to see a major pullback. But I do think we're going to see a pullback again at some point, because the markets do not go up in a straight line, right? There has to be pullbacks to shake out the weak hands, right? It's just inevitable. So I think over the summer or in the fall, we'll see another pullback. There's got to be something to scare people away again, because I think that people are, again, they're overly optimistic. A lot of people talk about, the stock market's so overvalued right now. And the real problem with that line of thinking is that it really depends on how you define overvalued, because based on PE, it definitely is overvalued. But if you look at the PEG ratio, which I brought up last week, but I think it's definitely worth bringing up again, based on the PEG ratio, which is the price to earnings when you factor in growth or expected growth, it's not overvalued. It's actually only slightly above its historical averages. So, and it's literally like 50-60% below the .com bubble. So people comparing now to the .com bubble, a lot of those stocks weren't even they didn't even have positive earnings, right? So if people talk about all of the Meg 7, it's so frothy, and I think they're right to a degree. But Meg 7 companies, they're all very good companies. Like, they're all undeniably are good companies. I mean, I think there's some that are certainly significantly overvalued, but they're all good companies. I think that's undeniable. So as far as stocks going forward, the near term, in the short term, I think that up is like the best predictor of the future is past recent performance, right? So if the recent history is up, well, chances are it's going to go up. So until we break the uptrend, if we break below the 50-day, the 100-day moving average, then I probably would get a little bit bearish. But the outlook when it comes to stock investing always is long term, right? Like if a 10 or a 20% drawdown is going to scare you that much, you shouldn't be investing in stocks in the first place, right? Like, I think Warren Buffett has said it, and pretty much like there's tons of people that have said it, in that, if you like a stock, right, even an index, right, but if you like a stock or an index, if it goes down 20% tomorrow, not only should you want to sell, you should like it even more than you did yesterday. Assuming that there's no fundamental, like, if legitimately World War III kicks off tomorrow, like, Washington gets nuked or, something like that, yeah, that probably would cause me to be, I don't think I would sell, to be honest, but I would be a little bit scared, right? I definitely would be a little bit scared. But when you look at these big sell-offs, right, like, I mean, the U.S., the stock market recovered after the Great Depression, right? The Great Depression, GDP came down, I think it was like 25%. The 2008 crisis, it was like 5 or 6%, right? So the Great Depression was 5 times worse than 2008, which is the worst recession out of anyone who's currently alive's lifetime, and yet we still recovered. So what makes you think that something that's worse than the worst recession in history is going to happen? Theoretically, yeah, it could happen. It could. But it's so astronomically low that the odds of, let's say, you staying on the sidelines and the market continuing to rip is orders of magnitude higher than this big crash coming. right? So that's my outlook on stocks. I'm always a net buyer, right? That's the key to stock investing. It's actually incredibly simple. Just always be a net buyer. So let's get into Bitcoin a little bit. Obviously, like I said, Bitcoin is at 117, 118. Obviously, there could be a big move overnight. So if that happens, take that with a grain of salt. But again, Bitcoin, I mean, and not to mention too, the one thing that was kind of interesting here was Bitcoin went up like $3,000 literally in a matter of about 5 minutes on Thursday, which is kind of, there wasn't necessarily a big catalyst for that. I mean, Trump did put out a Truth Social on Thursday morning talking very positively about crypto, but that was probably Bitcoin and crypto. That was probably like 5-6 hours before this happened, maybe 4 or 5 hours. Like it definitely was a good amount of time in between. So I don't think that was the driving factor. The driving factor, personally, I think, is more and more people are catching on to Bitcoin. I've said it time and time again. Eventually, people will catch on. I differ with a lot of people in that a lot of people say everybody's going to own Bitcoin someday. I think that certainly could happen, 100, 200 years from now. But within the next generation or two, especially the next generation, I just really doubt that. Because, the comparison I always make is if you go back 50 years, stocks and real estate have been an absolute no-brainer to preserve your purchasing power. Like just obvious to the point of absurdity. And yet, what percentage of the population owns stocks and real estate? I mean, I think the majority probably owns them indirectly, but I'm talking about directly through self-directed accounts or rental properties, et cetera, et cetera. Like, it's definitely a clear minority. I don't know what the number is off the top of my head, but I'd say it's maybe 10, 20%, maybe 30 at the high end. So my whole point here is there has been an obvious way to shield yourself against inflation over the last couple of generations, and the majority of people have not done it. So I don't think things are necessarily going to be any different with Bitcoin. Now, Bitcoin, I think, is going to outperform stocks and real estate, but I don't think it's going to be to the point to where even your average Joe buys in. My hypothesis has always been, 20, 30, 40, 50% of the population will own it. But I also think that it's only a matter of time until, Wall Street, pension funds, even governments, in general, start to really ratchet things up. And the next thing I wanted to get into here is Bitcoin treasury companies. I've made a prediction. I believe I've made this prediction before, but I think that there will come a day when the Bitcoin treasury company index is as big as the NASDAQ or even the S&P indexes, like the big ones. That would imply that these indexes are going to have to be trillion-dollar indexes someday. I think there'll be a day when your top 100, 200, whatever the number is, Bitcoin treasury companies, those top ETFs, will have trillions of dollars in AUM. And the thing that's really astounding is there isn't an ETF in existence, at least as far as I'm aware. I believe Strive might have filed for one of these. I could be wrong. But at least where we stand, there is not a Bitcoin ETF trading right now, at least as far as I'm aware, that holds the top Bitcoin treasury companies. And I think this is a massive opportunity for your BlackRocks and I mean, Vanguard is too ignorant to do it, but for the BlackRocks of the world, the ARKs of the world, like, why have they not done this yet? Now, to be fair, there only is, I believe, like 200 or 300 of these companies on the planet that currently own Bitcoin, and the vast majority of them have an extremely small amount. But give it a year or 2, 3, 4, 5 years, yeah, like there's going to be, the top like the 100th biggest company will have 10,000 Bitcoin. Like, and right now there's only 9 companies that have over 10,000 Bitcoin, right? So I think this is a massive opportunity for an ETF issuer. If you look at BlackRock's Bitcoin ETF, that is the most successful Bitcoin ETF, I believe, other than VOO. Like, you can literally count on one hand the amount of ETFs that have grown faster than IBIT, which just begs the question, why are they not doing even more of this kind of stuff? And the answer to that question is it's really only a matter of time. Like, it's really only a matter of time. The next thing here from Rajat Soni, Strategy's Q2 profit was 14 billion. Microsoft's Q1 profit was 25.8. Microsoft made 1.84 times the profit. MSTR is worth 114 billion. Microsoft is worth 3.71 trillion. Microsoft's market cap is 32.54 times bigger. So whenever people like me say, hey, I think MSTR is going to be a top 5, top 10, maybe even the largest company in the world someday, this is why, right? This is why. Microsoft didn't even make double the profit that MicroStrategy did, or Strategy, but they're 32 times larger, right? So, I mean, even if you want to imply that Microsoft is 50% overvalued, that still would imply that MicroStrategy's market cap should be like 1.5 trillion, which would put them in the top 10 companies in the world. So I think that it's not a matter of if, it's a matter of when. MSTR was up quite significantly this week, and again, I've said time and time again that I think we're going to have, if MSTR was at, 600, 700, 800 a share by the end of the year, is that even remotely surprising? I mean, to the people outside the space, yeah, but to me, no. If Bitcoin is at 200, 300,000, 400,000 in 6 months to a year, not going to be surprising to me. So, like I said, I think it's not a matter of if, it's a matter of when with this stuff. From Saifuddin Amus, the Fed started raising rates in March of 22 with Bitcoin at 42,000. 40 months later, Bitcoin is up 167% to 112, now 118. And all the poor fiat bros who said Bitcoin is a low interest rate phenomenon still have to listen to the Fed announcements every month like serfs listening to their lord. So this is a critique that a lot of people have with Bitcoin, is that, it's all, a low interest rate environment, or it's just a marker of liquidity. And to some degree they're right. Like, obviously if the Fed lowered rates to 25 basis points tomorrow, I almost certainly would bet that Bitcoin would be up probably fairly significantly. That's true. But what these people don't seem to realize is, when you're looking at investments, when you're looking at something to hedge yourself against inflation, you're not looking at something to do it over an extremely short amount of time, right? Unless you live in, like some tin pot third world country where inflation's like 50%, 100% per year. Yeah, maybe. But in the U.S., in Canada, in Europe, in the first world, even probably the majority of the third world, to be honest, what you care about is returns over years, if not decades. Because, and this is the thing one of the numerous things the gold bugs get wrong, right? The gold bugs, they'll have a week or a month where gold outperforms Bitcoin, and they'll start trashing Bitcoin based on that. And it's just proof that these people, again, they're lying to you, or they don't know what they're talking about. Because, again, when it comes to inflation, what you care about is preserving your purchasing power over long periods of time. Not short periods of time, long periods of time. Right? If I told you that gold will return 50% over the next month, but it'll return 5% per year for the next decade after that, or Bitcoin will return 20% per year for the next decade, anyone with a brain is going to choose Bitcoin, right? So just kind of showing my point there. The next thing here, and the last thing here, from Daniel Sempere Pico, Bitcoin Gandalf on Twitter, again, speaking of gold bugs. So this is from Peter Schiff back in August of 2017. Just had a client liquidate his entire IRA to put 100% of the proceeds into Bitcoin. What are the odds this turns out to be a wise move? And Bitcoin Gandalf, Peter's client is up 2,588% since he moved his entire IRA to Bitcoin. So again, if that was, let's say, $100,000, that would mean that he would have $2.6 million roughly, right? So again, this is less than 10 years. This is 8 years, not even 8 years. And this is what I'm talking about. What you care about when you're investing and when you're trying to reserve your purchasing power is returns over the long run. And Bitcoin has absolutely destroyed every other asset class over the long run. And it's going to continue to do that. And for all the people that try and question that, again, give me an argument, right? And they don't have an argument, because their argument always involves either straw man arguments, or the classics thing that, again, a lot of, and this is a way you know that people are wrong and just disingenuous or lying about stuff, is that if they take the weakness of Bitcoin and they compare it to the strength of something else, right? The gold bugs always do this. It's like, oh, what are you going to do with your Bitcoin if the power goes out, right? Like, again, they're comparing the strength of one asset to the weakness of another asset, right? That's like me saying, well, you know, what happens if the government, like, let's say Iran's going to nuke the U.S. What are you going to do with your gold? You're going to move your millions of dollars of gold to a different country? Like, again, it's just a blatant straw man, right? Just a blatant straw man. And whenever people do that, they should be dismissed. They shouldn't be taken seriously. And part of the reason that this works so good, to some degree at least, is that a lot of the people that are doing this are people that, at least from the traditional point of view, are very knowledgeable, right? There's a lot of financial advisors and quote-unquote professionals that say this kind of stuff. And again, just because you have a fancy title doesn't mean you're right. The best way to judge people's advice is to look at their previous track records. I don't care if you're some guy who sits at home all day, you know, he's unemployed, trading, sitting around eating Cheetos and drinking beer. I don't care if that guy's outperforming Warren Buffett over the long run. Probably going to start taking advice from that you know, the guy sitting at home. Now again, I would want a good track record, at least a decade probably, to start listening to that guy. But again, it kind of just, you get my point, right? So anyway, that's what I wanted to bring up today. If you liked the video, like I said, please like, subscribe, comment, check out those links below, and stay tuned for more.